Hello everyone, this is Atik and welcome to my video series on ratio analysis. In this video, we are going to talk about current ratio. It is a liquidity ratio that determines a company's ability to pay off its short-term obligations or current liabilities out of its current assets. Now, what are current liabilities? Current liabilities are those liabilities which are to be paid off within 1 year. And current assets are those assets which can be converted to cash within 1 year. It is a requirement under GAAP that companies should show these items separately on their balance sheet. By this, we can understand the importance of these items in our financial statement. Now, the formula for current ratio is current assets divided by current liabilities. If the current ratio of a company is 2, it means that the company has twice as much current assets than its current liabilities. It signifies that the company is in a better position to pay off its short-term obligations out of its current assets. Now, let's work on an example. In front of us, we have the balance sheet of Amazon.com for the year 2017 and 2018. We will compute the current ratio of 2017. The formula is current assets divided by current liabilities. We will move to the current assets section. We have cash and cash equivalent amounting to 20522 million. We have marketable securities, that is 10464 million. We have inventories, that is 16047 million. We have net accounts receivable 13164 million. Now, if we add these four items, we are going to get total current assets amounting to 60197 million. Next, we will move to the current liabilities section. We have accounts payable 34616 million. We have accrued expense and other, that is 18170 million. We have unearned revenue, that is 5097 million. If we add these three items, we are going to get total current liabilities, and that is 57883 million. So now we are going to divide the total current assets by total current liabilities. So 60197 divided by 57883, we are going to get 1.0399977 and so on. If we round it off to two decimal places, we are going to get 1.04. So the current ratio of Amazon.com for the year 2017 is 1.04. Now it is your task to figure out the current ratio of Amazon.com for the year 2018 and let me know in the comments section. I hope you'll find this video helpful. Thank you so much for watching. Do like and subscribe for more accounting videos every week. See you in the next video. Till then, goodbye and take care.